Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
Tesla, SpaceX, merger rumors aren't enough to keep me bullish. Rating downgrade. This article was written by Stock Bros Research. Summary: Tesla Inc. is downgraded from buy to hold due to weak automotive performance and uncertainty around robotaxi and Optimus execution. Q4 2025 saw revenue and EPS beats, but both declined year over year. Automotive sales fell 11%, while gross margin improved to 20.1%. TSLA's future hinges on robotaxi and Optimus, with $20 billion capex planned for ambitious growth, but near-term financials remain challenged. Despite a persistent uptrend, post-earnings price action and high valuation warrant caution until autonomous initiatives show scalable progress. A SpaceX and Tesla merger isn't likely in my view, as the two companies would likely be worth more as separate entities. Tesla Inc., TSLA, reported its Q4 2025 results yesterday. The financial results themselves probably aren't going to make you bullish on the stock, despite the revenue and EPS beat. Revenue fell year over year, and some other financial metrics trended in the wrong direction as well. But we can't deny the future potential and the fact that the stock has still been trending higher despite weak growth in recent months. It's simply not fair to label Tesla as just a car company. That would be ridiculous. There was also breaking news just minutes ago, as I'm writing this, that SpaceX is considering merging with Tesla or XAI. This was reported by Bloomberg News, citing people who are familiar with the matter, and it sent TSLA shares up 3% in after-hours trading. But that's not enough to get me interested, and thus I have more reasons to believe that it's actually going to happen. As of right now, a SpaceX-Tesla merger is just a rumor. Anyway, even with Tesla's massive potential and the uptrend that has yet to be broken, I'm downgrading TSLA's stock from a buy to a hold. I'm more or less neutral on the stock now, and investors showed that Tesla's promises on autonomy are not enough to send shares to new highs, since shares finished lower after earnings. Simply put, I want to be cautious and see a little bit more progress on robotaxis and Optimus robots before coming to any conclusions. In the meantime, I'd focus on looking for clearer opportunities while keeping an eye on Tesla regarding its autonomy progress and SpaceX talks. A recap of my previous Tesla article. I only wrote about Tesla once last year. I submitted the article on March 11th, and it got published the next day. That was basically the low for Tesla. In the previous article, I argued that the stock was a buy due to the panic surrounding it, and that the implied volatility for TSLA options was high, making it a smart idea to start a longer-term covered call position to take advantage of elevated premiums. I also highlighted robotaxi and Optimus potential, and I mentioned that I wasn't too concerned with figures like Tesla sales falling by 76.3% in Germany last February because they seemed like short-term issues. If you want more details, I suggest reading the article. Anyway, the trade ended up working out greatly because implied volatility came down noticeably since then, while the stock has risen. Specifically, for the June 2027 expiration, which is the one I talked about in my last TSLA article, the IV dropped from around 63% to 52% today. See below. I'm not as optimistic about this trade now due to the lower IV and higher stock price, so it's fair to say that particular trade is over. So, what should investors do now? Let's address the breaking news first, and then take a look at the recent numbers. Should investors buy into the potential SpaceX and Tesla merger? A merger with SpaceX and Tesla would be a huge moment, but honestly, the current news doesn't change my thesis. There are a few reasons why. First, this is just a rumor as of now, and it's not even highly likely to happen in my view. I'm pretty confident that SpaceX and Tesla would be worth more as separate companies than as a combined one, because some people who would want to invest in SpaceX wouldn't want to be invested in Tesla. I'm not sure that CEO Elon Musk would want Tesla to have a conglomerate discount. If you don't know what that means, Investopedia defines it as this. A conglomerate discount is the market's tendency to value a diversified firm at less than the combined worth of its separate businesses, often due to reporting complexity or management inefficiencies. There's a real chance of that happening, if a merger occurs. I also don't exactly see the need for the combination to happen, because Tesla and SpaceX can still help each other and work together without a merger. Elon Musk benefits from them working on projects together, since he owns both. A merger isn't required for him to benefit. In my view, a SpaceX and XAI merger is at least more possible though, since XAI is smaller and wouldn't really cause a conglomerate discount. Additionally, Elon Musk didn't deny the SpaceX XAI merger news, but he replied to a post on X in a way that somewhat hints that he's on board with the merger. But this is speculative. If more news comes out that SpaceX does actually intend to merge with Tesla, assuming it's convincing and not just a mere rumor, that would change things. It could temporarily give Tesla stock some momentum, just as it did in after-hours trading. At that point, I'd consider temporarily buying in to ride the momentum, but we're not at that point yet, and I just don't see the merger happening. With that out of the way, let's get into the Q4 results. Tesla's Q4 financials were suboptimal. Tesla's Q4 2025 revenue was $24.9 billion, beating estimates by $140 million, and its non-GAAP EPS was 50 cents, beating estimates by 5 cents. But despite the beats, revenue fell by 3.1% year-over-year, and non-GAAP EPS fell by 17%. Cash from operations also fell by 21%, and FCF fell by 30% to $1.42 billion. The automotive business just isn't doing well, as its sales fell by 11% year-over-year to $17.693 billion. The energy generation and storage business grew by 25% to $3.837 billion, while services and other revenues grew by 18% to $3.371 billion. But these weren't enough to offset the declining automotive segment. One positive from the screenshot below is the fact that the total gross profit actually went up by 20% despite lower sales, since the gross profit margin rose from 16.3% to 20.1%. But everything else fell, including the operating margin, adjusted EBITDA margin, and net income margin. Is the automotive business dying? Tesla's automotive business is dying slowly, but I assume the company isn't too concerned about this, considering the company's robotaxi ambitions that will, in their opinion, make buying cars less necessary. Either way, for the full year, Tesla's auto revenues fell by 10%. I understand that economic uncertainty affects car sales, but this result is much worse than General Motors' 1.3% sales decline for 2025. And sure, the $7,500 EV tax credit ended on September 30th, 2025, but that can't be blamed for everything, since Tesla car sales weren't exactly that strong earlier in the year as well. Further, and this is just personal opinion, but I think it matters, most Tesla models just don't look that nice. The designs have looked mostly the same for a long time. Even the refreshed version of the Model Y doesn't look all that different. I personally wouldn't buy a Tesla because I'm bored of the way they look. Except the Model S, which is going to be discontinued anyway, so it doesn't matter. And I know a few people who have the same thoughts. There hasn't been much innovation in that sense, looks-wise. That can be just as important as all the tech innovation for car sales. It seems as though robotics and robotaxis are taking up all the company's time, while the automotive business isn't as important. And I'm not really exaggerating much by saying that, since Musk specifically said that Model S and X production will be wound down next quarter, stating, "It's time to basically bring the Model S and X programs to an end with an honorable discharge. We expect to wind down S and X production next quarter and convert that into an Optimus factory in a very capital-efficient manner." Optimus potential. In the Q4 2025 shareholder deck, Tesla highlighted the Optimus progress, stating that it plans to unveil the Gen 3 version of the robot this quarter. This generation is said to have major upgrades from version 2.5, and it's also the first design meant for mass production. The goal is to have production start before the end of this year, and an eventual planned capacity of 1 million robots per year. I know Tesla is generally too optimistic with its timelines, but I wouldn't doubt that it can achieve mass production sometime in the near future. Betting against Tesla's innovation hasn't been a winning game. Driverless robo-taxis have been operating in Austin as of December, and this month, the safety monitor has been removed from rides on a limited basis. Some people claim the cars are still being followed by a safety monitor, But Elon Musk denied this during the recent earnings call, saying, "And I think maybe as of maybe yesterday or so, we actually don't. We don't even have a chase car or anything like that. So these are just cars with no people in them, and no one is following the car in Austin. Whether you believe him or not is up to you, but I'll take his word for it. If he's telling the truth, that's a huge step in the right direction." Also, cumulative paid robotaxi miles are increasing quickly, and I expect this to accelerate as the rollout continues. Below are Tesla's robotaxi coverage targets, with 7 more major cities expected to have some form of robotaxis within the first half of this year. My take on the robotics and autonomy goals. While things are taking longer than expected to roll out, we can't deny that progress is being made. It's too early to give a definitive answer, but things look promising. I believe that by next quarter, we'll already have a much clearer idea about whether robotaxis will work.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.